Right, well, that is the vision from Anil Agarwal, but what about the individual stocks and what is in it for shareholders? Piyush Jain, the equity research analyst for energy, industrials and utilities at Morningstar Investment Advisors, joins us now. He's had a very hectic last fortnight, delving into the details of this entire merger, and now finally it's through. Piyush, tell us what is in it for the Vedanta and the Cairn shareholders separately.
Yeah, sure. So I think for Cairn India, if you look at the valuation, like the valuation for the stock would have been somewhere around 2,300 if there was no tax overhang. So if you look at the tax overhang, about 20,000 crore of tax liability as a contingent liability. So, and out of which about 10,000 crore as a principal liability. So because of that, and then when you look at a de-rating, primarily because of what the group transaction had happened, I think Cairn has basically come down because of due to that. So what we see now is that this is a slight disappointment for the Cairn shareholders, because what 1:1 swap is clearly saying that you are not discounting one of the highest returns on invested capital in terms of what oil and gas assets the Cairn has. So primarily Cairn has onshore oil and gas assets, which are one of the best in class. So even at the crude price of around 45, they were delivering returns which were much above the cost of capital. So from that perspective, I think this will carry a slight disappointment for the Cairn shareholders. Overall, if you look at what is happening for the Vedanta shareholders, this is clearly going to give them an access to a cash generating asset, and I won't be surprised if we are going to see more follow-ups on other subsidiaries, because there is a clear asset liability mismatch in the Vedanta case. They had a lot of gross debt on the balance sheet, but they needed access to the cash generation. And this process is going to help them repair the balance sheet, which will mean that you're likely to see a positive shift in the credit rating outlook. So over the next 12 to 18 months, the balance sheet will imply that in terms of the cost of capital, it's going to go down, the interest cost is going to go down, which will mean that there will be an improvement in the overall quality of the balance sheet. And this will obviously mean a re-rating for the Vedanta stock.
Okay. Actually, at this point in time, the Vedanta stock is in the red and the Cairn stock is in the green. But yes, both of them have come off a good 4-5% from the day's highs. So we are just looking at it at a point of time. What are your price targets for both?
So Vedanta we're not covering directly, but we are covering it as a peer coverage. So we are tracking it in terms of our global coverage. Okay. But in terms of Cairn, we basically had targets of around 300, primarily because we believe that the onshore assets which Cairn had, through the cycle, it would be able to deliver returns on invested capital greater than 20%. And we were not that bearish on the crude prices as per the street. We had a mid-cycle crude price of 75. And which would have implied that over the time the prices would have started responding to returns on invested capital. But given the fact we had taken into account of the contingent liability, so if you take into account the principal tax liability, the fair value would have come somewhere around 240 rupees. So I think taking into account that, I think we still have, and if you compare historical global settlements for these tax disputes, normally you would expect that interest normally are not basically taken into account when you go for a tax settlement.
But for a Cairn India shareholder, there is a positive in this as well, that it will now get access to the Hindustan zinc business, which is a very lucrative business as well, right?
Yes.
So don't you think that will sort of overshadow some of the negatives?
That will overshadow. So eventually there are two things here. If you are a core energy investor, then this will be sort of disappointment for you. Because what you are getting is a lower return on invested capital in terms of the diversified company. Okay. Cairn's assets were much higher returns on invested capital.
Okay.
And if you're looking in terms of a diversified commodity exposure, then this will be the best exposure you're going to get. Because you're going to get a diversified metal and energy exposure.
Okay.
And in India, basically if you want to invest in commodities, then I think the Vedanta is a stock you will like to invest.
Oil and gas sector mutual funds will sell the Cairn stock, but resource guys should be buying this combined entity. Do you think the minority shareholders may say no in Cairn?
There is some chance, depends. Like if you are an institutional investor which has holdings in both of the companies,
okay,
then probably you will take a very long-term view. Because in long term, what you might be losing out in Cairn, you would be able to make up in Vedanta stocks. But then eventually, if you are an institutional investor which was invested only in Cairn, in terms of oil and gas exposure, then you are likely to take an objection here.
All right, we leave it at that. Piyush, thanks for joining us. So the merger is a positive for Vedanta, but for Cairn there is a slight amount of disappointment. They could have got a better deal. But before we wrap up, here's our closing bell money control question of the day. Do you think minority shareholders will oppose the Cairn Vedanta merger? Log on to moneycontrol.com, post your responses there, and we'll read out some of the most interesting responses post 3:30 p.m. this afternoon.
And also, do remember to stay tuned at 11 a.m., which is when the managements of both Cairn India and Vedanta will speak to CNBC TV.